Can Nigeria's new oil sector cost reforms via executive order turn policy into profit? Good morning and welcome to another packed edition of Business Week, where we help you catch up on all the big business stories of the week. From Tinubu's bold executive order slashing upstream oil costs to Dangote ending Nigeria's run as Africa's top fuel importer, Nigeria may be rewriting its energy playbook, maybe. Meanwhile, Saudi oil giant Aramco is back in the bond markets with a $5 billion raise, and JP Morgan's Jamie Dimon is warning of a looming crack in global debt markets. As investors digest Nvidia's AI pad earnings and Europe edges towards easing rates, Africa looks inward. The Africa Development Bank cut its 2025 growth forecast for the continent, just as Mauritania's Sidi Ould Tah takes the helm as president-elect of the bank, urging countries to mobilize their own capital. Amid all this, Japan's 40-year bond yield hits record highs, fueling fears of global capital shifts. Later in the program, Kelvin Emmanuel joins me to discuss President Tinubu's new executive order. I'm Rolake Akinkunmi-Filani. Don't go anywhere. As always, we'll start to look at global commodities. Brent and WTI down 1.65% week on week and 2.35% down week on week, respectively. What's going on here? Well, OPEC plans to release almost 500,000 barrels a day of production onto the markets from July. So that's creating some worries amidst trade tensions, which are still weighing on trader sentiment. Natural gas was up by 3.6% week on week. And of course, RBOB gasoline down, tracking Brent by 4.25% week on week. Let's take a look at equities, starting, of course, here at home with Nigeria. Let's take a look at what the all share index is telling us. Week on week, not a bad performance, up to 2.49%. to close trading at 111,742.01 points. Number of deals, 18,000, not bad, up 17.12% week on week. Volume of deals, almost 2,000, up week on week 198%, and value at 64.14 billion. Market capitalization at the end of the week was 70.46 trillion naira. Let's take a look at equities markets elsewhere. Africa, the big one to point out here is Accra Stock Exchange down by 3.26% week on week. And the big mover and shaker, if you like, here was MTN Ghana, which is a heavyweight on the Accra Stock Exchange, didn't come in too well on the trading front and helped pull the market, or drag the market down, actually, with a 3.26% fall week on week there in Accra. Nairobi, not bad, almost flattish, but up a bit at 0.2%. And Casablanca was also down week on week by 0.75%. Let's take a look at Europe this week. It's all green in Europe, but are we surprised? European Central Bank, most markets are expecting rates to ease from next week when the ECB announces its next policy decision. And typically, that's a good sentiment for markets. Euro Stoxx 600 was up by 0.71%, as was London's FTSE All-Share Index. DAX in Germany, Paris was also up, and Spain, IBEX was up 0.34% week on week. Now to my top picks from around the world. First one is that Nigeria's President Bola Ahmed Tinubu has signed another, in this case, I'm describing it as a landmark executive order to slash upstream oil sector costs in Nigeria through a performance-based incentive. I'm not going to delve too deep in that because I have Kelvin Emmanuel, energy economist, coming in later to help me make sense of it all. But from one oil story to another, and perhaps giving us a glimpse of what NNPCL could become in the future, Saudi Aramco raises $5 billion in its first dollar bond of 2025. Now, the idea behind this raise is to help the company leverage its balance sheet, which is quite a hefty one. It still has a relatively low gearing ratio of 5.3%-ish, and the gearing ratio is essentially an indication of how indebted the company is, and that gearing ratio is much lower than most all majors. So actually, it still has quite a bit of headroom to borrow. And if you've been following the Saudi story, the government there has been trying to diversify away from oil in recent years. So this bond raise actually came in the long-dated issue, which is a 30-year issue with a tranche of about 2.5 billion, came in about 155 basis points above U.S. Treasuries. That's 1.55%. So interesting times here for Saudi Aramco. Of course, last year it raised about $9 billion worth of bonds for similar purposes. So still able to leverage its very hefty balance sheet there. One of the world's most prolific national oil companies, CDTAP, has been elected. The Mauritanian has been elected as the new AFDB president to take over from September from outgoing president Nigeria's Akinwumi Adesina. I was in Abidjan during the week watching all the very exciting and dynamic proceedings here. Of course, he was the erstwhile Director General of the Arab Bank for Economic Development in Africa. He's a Mauritanian. He has a PhD in economics. He's seen as a very steady hand and has talked a lot about taking Adesina's high fives to the next level. He will have some big shoes to fill, not least because the U.S. has talked about pulling back over $500 million worth of funding it used to give to the AFDB. But Sidi has a lot of consensus, right? He won the elections here with 76% of the votes, and he was elected by 80 governors, both African and non-African. As you know, the AFDB shareholders, Nigeria is the biggest, but shareholders include African 55 countries, as well as others from elsewhere. So good luck to Sidi Tao. We'll be following his tenure very closely. Ramaphosa in South Africa has said that the country has already attracted $13 billion in infrastructure investment to help pursue the country's development plans. And so he's embarking on a construction spree or a building spree, if you like. Now, this is a very important one because it comes on the first year anniversary of the coalition government, the ANC and the Democratic Alliance. And he was speaking at an infrastructure summit. South Africa, of course, in recent times has really suffered from severe power sector infrastructure challenges, power cuts, challenges at Eskom, the state utility. So it hopes it can really push forward long-term infrastructure development plans. The government has already allocated around 1.03 trillion rand to infrastructure development in the country. Let's see how well these projects are executed. Finally, JP Morgan CEO Jamie Dimon has warned of an emerging crack in global debt markets. If you've been following the dynamics of the global debt markets, you would have seen that U.S. Treasuries are at an all-time low. The yield on U.S. Treasuries has risen to about 4.48%, potentially raising the cost of government borrowing in the U.S. And we've been talking about the U.S.'s $36+ trillion in debt. We might see another added $2.7 to $3 trillion in debt because the government of Trump is talking about tax cuts. That's not really, you have to fund that deficit somehow. So more borrowing, and more borrowing. And of course, Jamie Dimon, who is a well-respected and credible voice, is warning that there may be cracks in debt markets. We'll be talking about Japanese debt markets shortly. Well, that's it for my top picks for the week. Let's now take you to some of our top stories for the rest of the world. Japan, with long-dated rates hovering close to record highs, the Japanese bond market is causing concerns about capital flight from the US and a carry trade unwinding. If you're wondering, that is, we'll be talking about that in more detail later on the show. According to Reuters calculations, demand for 40-year Japan government bonds fell to its lowest level since July of last year, remaining close to the record high set last week, and yields resumed their upward trend on Wednesday, almost 70 basis points higher this year. The yield on Japan's 40-year government bonds reached an all-time high of 3.689% on Thursday and was last trading at 3.318%. Now to Europe. Joachim Nagel, Bundesbank president and a member of the governing council of the ECB, has stated that the European Central Bank is almost at its 2% inflation target. High levels of uncertainty make it impossible to forecast future interest rate movements and necessitate maximal flexibility. Nagel also stated that the goal was at least within reach In reference to the recent increase in underlying and services inflation, he stated that even though it is still rocky, the bank is on the right track. He emphasized the ECB's data-dependent and meeting-by-meeting strategy, saying it's still too early to predict whether officials will cut rates again at their next meeting in less than 2 weeks. It's actually next week. Now, chip giant Nvidia released mixed first quarter results on Wednesday, which caused its stock to jump around 5% on Thursday. It was headed for its highest closing since January as a result of the increase. Wall Street's initial response was that the ramp up of the company's Blackwell chips and positive signals from Nvidia and CEO Hensing Huang over the need for AI infrastructure outweighed an $8 billion revenue impact from the US's China export and trade tensions. According to data collated by Newswires, the AI hardware behemoth recorded revenue of $44.1 billion for the first quarter, exceeding analyst projections of $43.3 billion. Last year, Nvidia reported $26 billion over the same time frame. Not a bad performance there. Now, Jerome Powell, the chair of the U.S. Fed, met with Donald Trump on Thursday as the president pressed for the central bank for lower interest rates. The Fed emphasized that the future course of monetary policy was not discussed in a statement confirming that the meeting did take place. Powell met with the president at the White House at the president's invitation to discuss economic trends, particularly issues of inflation and growth. Salesforce announced on Tuesday that it is investing $8 billion to acquire cloud data management startup Informatica. On Tuesday, Salesforce stock ended the day more than 1% higher, and stock in Informatica increased by 6%. According to the statement, the agreement would pay $25 in cash per share to holders of Informatica's Class A and Class B1 common shares. According to Bloomberg, the corporations were negotiating a deal. Informatica's stock rose more than 17% as a result of the report. And finally, U.S. Secretary of State Marco Rubio announced on Wednesday that the U.S. will start aggressively revoking visas of Chinese students, including those with connections to the Chinese Communist Party or studying in critical fields. If applied to a broad segment of the hundreds of thousands of Chinese university students in the U.S., the move could disrupt a major source of income for American colleges and a crucial pipeline of talent for U.S. tech companies. Well, that's all we have time for here.